Hello, everyone. Could you please confirm, is my voice audible? And what about the screen? Is that visible? And I think there is some issue with the screen sharing. Just a minute. Yeah, now it's fine. All right. So I welcome you all to the Game Changer webinar session, day 2. Uh, in the last session, we did discuss few important tips which one has to keep in mind while taking their exam, as in what are the do's and the don'ts of TX examination. So I am just going to continue that thing in today's session. But first of all, we need to see that what we did in the last session, as in I did discuss that what exactly the issues students usually face, which may become the reason of failing their exam. And this is something which is a kind of a lesson for you people, as you are not supposed to repeat such mistakes. One should be having a good grip on the technical aspect of the syllabus. They try to cover the whole of the syllabus. And then when you enter the examination hall, you really need to keep an eye on the time. Utilizing the time appropriately for every question, that is the wisest thing one can do. And leaving the paper behind, I mean, not completing the paper is like leaving a bad impression on the minds of your paper checker. And then we did discuss the students if they failed last time. So whether they had secured a less than 45 marks or their scores were ranging in between 45 to 49, because in both cases, they really need to look at the strategies to be applied in next examination. And then I started discussing Section C of June 2026 exam. Well, this is the latest exam available on your practice platform. I did take you to the practice platform, and I told you people that there are many files available on the practice portal, which you need not to open, as it contains questions according to the previous finance act, and obviously their solutions are made according to the previous finance act. So this is like a kind of an outdated thing, and you should really be relying on the updated material. I did discuss that which few of the files you may use, out of which this June 2026 is like one of the recent most examination, which you can surely use. Secondly, your preparation should technically be done from Kaplan revision kit, because Kaplan revision kit does contain almost all the past exam questions, or you may say in the recent most attempts, whatever the questions examiner had tested, it nearly includes all, and that's so in its adapted form. So this is like going to give you the best way to enhance your practice skills. Well, what we are going to do now, let me just tell you that once you exactly approach at last 10 days before examination, your major focus has to be towards practice. I mean, 75% of the time period that you allocate to your studies should be spent for practice purposes, while 20 to 25% has to be spent for like revising the rules and all. As you know that TX examination is a comprehensive sort of exam. It does contain a comprehensive syllabus, so one really needs to go through the syllabus on like frequent basis for the sake of revising the concepts. And I shall actually be sharing a document with you people in which the strategy of last 10 days will be discussed. I have actually made a planner in which I would tell you that let's suppose in 3 days you'll have to cover income taxes, then in 2 days you'll have to cover this kind of tax. Though you are professional, this is something which I've told you people before, you yourself are professionals, you really know it very well, maybe better than me, that how you need to tailor your 10 days preparation stage right before your exam. But I'll be sharing my document with you people as well, so that if in case that is going to suit your routine, then you may incorporate it as a part of your learning process. Okay, so this is something which we have gone through already yesterday. It says that the best technique to handle your exam is that you are going to deal with the easiest question first. Do not try handling the difficult or the ambiguous question in the first go. Rather, you really need to keep on like doing as many questions as possible, which are find easier to you people. And that is basically a nice time saving activity. And then, as what I said always, that you really need to be very conscious when it comes to the time. So your exam is going to be of 180 minutes long, in which you have to actually complete 100 marks. But if you score either 50 or more than 50, then you'll be considered as pass student. So in order to cover 100 marks in 180 minutes, that means on by standard, you have 1.8 minute per 1.8 minute per mark. And that would mean that, for instance, if you have a question which is of worth 2 marks, then 1.8 into 2, you've got almost 3.6 minutes in order to cover that particular thing. So you really need to be confident enough. Your practice should be ample enough before appearing in the exam. And if your practice is good, only then you can keep a strict eye on the time management. And then do not left your answer script incomplete. This is the same thing. And for the descriptive questions, I have told you people that you really need to give an importance to the marks attached with the requirement. So if you are given with a question which is of descriptive in nature, for instance, it is asked that explain something or give an advice over something, do you need to see that how many marks are associated with it? For instance, if a question is of like 3 marks, then you need to produce 3 valid points. And see, you will not be making lengthy paragraphs in order to illustrate a valid point. The passages should be technically small. I mean, 1 up to 3 lines, they are sufficient in order to indicate a valid point. Otherwise, if you have something which you may write in by making like 5 sentences, 5 statements, then instead of like making it as 1 point, you will have to split it and present it as 2 valid points, right? And of course, when it comes to descriptive question, it is always advised that you will be putting a heading in the start of your answer as well. Then you really need to focus on the verbs, the commanding words, action words, as in if it is said that you need to calculate, then do the calculation only. If it is said, as this is the same example which I discussed with you people yesterday, that you need to state corporation tax. So corporation tax is something which requires calculation. But if your examiner is like focusing on the word state, then that means verb is about making a statement. Of course, in order to come to the conclusion, you will have to do the calculation. But then in the end, do not forget to put a statement that what your corporation tax liability for the given accounting period is, because that is like going to grab an easy mark. And if you just ignore this thing, then you will be losing on some easy marks. All right. So technical knowledge, the syllabus knowledge is very important, and you really need to be using the professional language throughout. I mean, when it comes to personal loans, you really need to be explicitly mentioning the word personal loans or annual exempt amount. You would not be like using the general terminologies as in like there is a certain allowance we have up till which we are not supposed to pay taxes. There is a certain name given to that particular thing. So you need to mention that thing. And this is how you'll be making use of the professional language in your examination. Wi-Fi is offering revision classes at a very nominal price. If you would like to take an admission in it, you need to coordinate with the support team. This is my number, and I'll be sharing the contact details of support team member as well. Well, now I am going to take you to the practice platform as we started discussing. June 2026 exam attempt for taxation. It is the same exam whose question number 3 was left undiscussed, and this is something from which I shall be taking a start with. Right? You need to just give me a minute so that I may take you to the particular point where we can have an access to latest exam attempt. And just like how we did yesterday, I shall give you people some time in order to go through the requirement of this question, and then we'll start doing the calculation on the worksheets given to us. There you go. In the start of your exam, you come across certain instructions, but I don't think that you'll have to leave this instruction manual for the exam day. The same instructions are given in the start of your Kaplan revision kit. Please go through them. Please learn that what sort of instructions in general your examiner wants to give you. And on the day of exam, you really need to focus on the technical side of your subject and not on the instruction side, because this is something which you can grasp right now. The day of exam is not the appropriate day for doing this thing. All right, students, I'm just going to turn my camera off, which was not precisely required to be turned on even in the start. This is question number 3. We know that section C has 3 questions. Question number 1 will be of 10 marks. Question number 2 and 3 will be of 15 marks each. We are done with question number 1 and 2, while third question is still to be discussed. Question number 3 will always be covering corporation tax rules. Okay, kindly start reading the question, please. I should keep on scrolling up the screen time by time to show you the remaining portion of the question. All right, I believe that you all must have gone through this question number 3 entirely. The question number 3 is of 15 marks in total, out of which 12 marks requirement is right there in front of you. Well, it says that we need to calculate. So focus on the verb calculate. Gamal Limited's corporation tax liability for the year ended 31st March 2026. And as I told you people before, that whensoever any note is specifically mentioned, you cannot ignore it at all. So it says that your computation should commence with the draft trading profits of 1,452,200 pounds, indicating by the use of zero any items which are not requiring any adjustment or inclusion. So if you are not going to either include or exclude anything, that should be mentioned as like zero. Zero should be written in front of them. Okay, so for corporation tax computation, what we need to do is that companies have to calculate the corporation tax liability, precisely the UK resident companies, and it is done according to an accounting period. It is never done according to the tax year. Companies, if they make accounts for 12 months or less than 12 months, that period is straight away taken as an accounting period. But whensoever companies are making their financial statements for more than 12 months, then it has to be split into the two accounting periods, as accounting period cannot handle more than 12 months. So first 12 months information will be kept separate from the information related to the remaining months, as the longer period would then be split into two accounting periods, right? Then it is said that the trading profit based on the draft financial statements for the year ended 31st March 26 is 1452200. This figure is after deducting depreciation of 78,800. So this is like already done. And we need to see that if it is something not to be taken into account, it should be added back. And well, depreciation is the term used in accountancy, and this is something which is like straight away a disallowed expenditure when it comes to the adjustment of trading profit for tax purposes. And there is also a qualifying charitable donation of 8,100 pounds. See, QCD is something which is deducted against the overall profit of the company. It is though deductible, but not solely against the trading profit, but against the overall profit. So if this has already been deducted against the trading profit, I will have to reverse this calculation. Okay, but this figure of 1452200 is something in which some of the following adjustments are yet to be taken into account. Okay, I'm just going to take a start, as you have gone through the information. You must have seen that this company is receiving the property business income, the trading profit, and if I have to list down the incomes on which company is paying corporation tax liability, then let me just tell you that from every source, when the company is receiving the income, that is going to be taken as a part of their corporation tax pro forma, be it a regular income, the property income, or even the capital gains. But yes, there's one income which is the famous most income, and a company earns, but it is exempt, and that is dividend income. So this is about year ended 31st March 2026, for which we are going to do the calculation. And the first thing is that I will have to take into account the profit and the rental income, which we call as the property income. And then we come across, there's like, I don't find any other income in the question. So this is like going to be, still I have left a line or so to be like safe. This is the total profit, and then against this we will be deducting the QCD, and that's how we come to know what the taxable total profits will be, right? Okay, and then on taxable total profit we shall be applying the tax rates. I'm just going to take a start with the calculation, and what the calculation is all about. I am going to calculate tax adjusted trading profit, right? So whether it's about individuals or it's about companies, it's always the adjusted profit figure that is assessed. That is something which we need to take into account for corporation tax computation purposes. Okay, so I'm just going to label it completely. This is the reference working. I have put beside it. Now, we are given with the draft financial statements. Our trading profit as per draft accounts. This is like something with which we need to take a start. It's of 1452200. And then, as we have seen, that depreciation is something which is not liked, it is not acceptable, permissible. So I'm just going to add it back. It's of 78,800 pounds. Then QCD, well, I will deduct it, but against the overall profit figure, but not against the trading profit itself alone. So 8,100 is going to be added back as well. This is called QCD. And then there are a few more things which we need to take into account. Now, we will have to go through each and everything one by one, and there we decide that something is deductible or not. And considering no treatment for the next few things have yet been taken into account while calculating trading profit figures. So if something is deductible, I will deduct it. And if something is not deductible, I will not deduct it. There is like no such thing now to be taken into account where we are going to reverse any adjustment, because the reversal based adjustments, I mean, those adjustments which have already been executed by the accountants, but HMRC doesn't like it, and we have to make a reversal. The reversal sort of adjustments have already been considered, and now the straight adjustments are to be taken into account. Well, the first passage says that a premium which was paid on 1st of October 25 to acquire a leasehold office building on a 20-year lease, the amount of the premium assessed. See, this is not the exact amount of the premium that the landlord received. Rather, this is the premium assessable figure. Well, how we reach to premium assessable, it's the formula with the help of which we convert the premium into the premium assessable figure, and the formula is P minus P into N minus 1 into 2%. Well, there are students who use another formula for this purpose, which is equally correct, and that is 51 minus D over 50 into P, where D stands for the duration, the number of years for which the property has been leased out, and P is obviously standing for premium. Okay, but they have already given us with the premium accessible figure, that's of 74880. And see, our company is the one who is not receiving the premium, they are paying the premium. So when it comes to the tenant who is paying the premium expense for a year needs to be determined, because this is called as short lease premium payment, and this is something which is an allowed expenditure. I mean, this should be deducted. Now 74880, I'm going to deduct it, which is why I'm going to take a start with the sign of minus. 74880 is the premium assessable figure. I'm just going to divide it over 20 in order to see what premium expense for a year is, because on yearly basis we will be deducting our expense, but I need to apportion it further as well, I believe. See, our accounting period is from April 25 to March 26, and this property was leased out on 1st October 25, which means that in the current accounting period, it's about only October till the end of the period, which is March. This is only about 6 months for which the property was acquired for lease. I mean, we had to pay only 6 months expense as far as the matching concept, the accruals concept is to be applied. I mean, when it comes to trading profit calculation in individuals, though we have accruals and the cash payment concept, but in case of companies, we have only accruals concept. And well, in both of the cases, and even in the case of individuals and you're applying cash basis, keep that thing in mind. If someone has got the building on lease and paid the premium assessable, you need to figure out that how many months are basically exactly matching with the accounting period for which the expense is like relevant to, and only that expense needs to be taken into account. So from 1st October till the end of the period, it's about 6 months. So 6 months expense, which is like deductible. So I'm going to deduct it. That's of 1,872 pounds. This is called short lease premium payments, right? Then what we have next, it's about capital allowance. And of course, as it is like containing some comprehensive information, what would I do? I will be calculating the value for capital allowances first, and then we will be deducting it as it's also an allowable expenditure. All right, I'm just again going down a bit in order to see how the capital allowances are to be calculated. So could you see that there are few purchases made in the accounting period, and it is always the accounting period for which corporation tax computation should be carried out for capital allowance calculation for companies should be carried out. So the accounting period is for year ended 31st March 26. Okay, so we are going to take a start with few of the columns, I believe. I mean, I will not be making all the columns because that is not something required over here. We have a delivery van on which annual investment allowance will apply. Don't confuse van with car. Van acts as a simple plant and machinery. So in the year of acquisition, we apply AIA. Then we have got new car, which is qualifying for first year allowances according to the information given, as it is like carrying zero carbon dioxide emission. Then we have got a second-hand car. Again, its carbon dioxide emission is zero. Could you let me know that what capital allowance rate do I need to charge in this case? Does anyone know that what charge, what WDA or FIA or whatever we have to apply in cases where a car is said to be a low emission car, a car is like said to be emitting no carbon dioxide emission at all, but it is a second hand car. That's 18% which we shall apply. In all the cars, if they are new ones and they are carrying zero carbon dioxide emission value, then the rate will be the first year allowance will be applied and the rate will be 100%. Well, in case though the car is emitting 0 grams per kilometer of carbon dioxide, but it's a second-hand car, then we'll have to treat it in a normal way where WDA at the rate of 18% shall apply. So the thing is, I believe that I should make 3 columns in total: AIA, in fact, AIA, FIA, general pool, and total. So I have made technically 4 columns, and we shall always be taking a start with WDV brought forward. But could you see that the WDV brought forward is 0? Okay, so there is like no WDV There is no WDV brought forward. And then, is my voice audible? All right. Okay, so then we have to consider the additions, the purchases which are made in the current accounting period, starting with the purchases which are not qualifying for AIA and FIA. Well, this is about, unfortunately, the second-hand car, which is not qualifying for, which is like never qualifying for AIA, and it is not even qualifying for first year allowance. So second-hand car is having a cost of 20,900 pounds. Then we need to consider the addition, which is qualifying for at least annual investment allowance, and it does contain the second-hand delivery van and the new lorry. See, these both are the items. They first qualify for AIA, and then the leftover value will then be falling in the general pool. But here, their values are on the minimal side. I mean, the total of this is like under 100,000 pounds, or maybe I mean, this is like not crossing the limit of 1 million pound, which is otherwise the maximum limit available in case of AIA. So it's about delivery van. I am so sorry for this. So the delivery van and new lorry, both of them are costing, let me just take a total of it, 23,200 and 68,400. The total is 91,600. And well, this is like way much under controlled situation. So AIA is 100%, I mean, all in all applicable. The whole value is going to be adjusted completely. Though AIA does not have a rate of 100%, but by saying that 100% of AIA is available would mean that the whole amount is now going to be covered under AIA, and no amount is then gonna be left behind. Had there been left any AIA, then this would have been taken to the column of general pool, but that's not the case over here. I'm just going to highlight this thing as well so that we will eventually be picking it up in the column of total as it is the allowance value. And then I need to consider if there is any addition which is qualifying for first year allowance, and it is about the car whose carbon dioxide emission is zero and it's a new car. Its cost is 40,900 pounds, on which we shall apply this thing. Okay, so no value is gonna be left behind. The first year allowance is always applied at the rate of 100% on low emission new cars. And then I need to see that if there is like any other asset on which we shall be applying WDA. And yes, we do have this general pool item on which I will be applying the rate of 18%. So 18% of this 20,900 will be 3,762. You will not be considering the date of their purchases, as it is always about the length of accounting period according to which one shall be calculating capital allowances. In individuals, it is the period of account, and period is something which could be of 12 months, less than 12 months, or more than 12 months. Even in case of individuals, we do not look at the date of purchase. It is always about the length of financial statements. And here, as we follow accounting period, would mean that if, I mean, as long as the accounting period, the period of account is having a length of 12 months or less than that, it is straight away taken as accounting period. Otherwise, if company would have made accounts for more than 12 months, for instance, for 15 months, then we shall be splitting this longer period into two accounting periods. Okay, so after having this WDA, what value of the asset is gonna be left behind? I mean, what is the WDV carried forward? This would be like 20,900 less 3,762. That's of 17138. Well, now I'm just going to put the values in the column of total. We do have an AIA of 91,600. Then we have first year allowance of 40,900. And then we have WDA of 3,762. I did not take any disposals in this case because no plant and machinery has been disposed of. Okay, I'm just going to take the grand total of our capital allowances. That's going to be of 136,262. So this is basically the capital allowances value, the tax depreciation. It's appearing under the cell G50. All right. So what will I be doing? I am going to profit calculation is equal to minus. Why I'm going to put a sign of minus? Because it is an allowable expenditure. It should be deducted. So the cell number is G50. All right. So here the cell information is like pasted. And then we have another paragraph as well, which is about the structures and buildings. So it says that structure and building allowance is available in respect of the cost of renovating a disused freehold warehouse at a cost of 160,800 during August 25. The warehouse was subsequently brought into use on 1st November 25. The warehouse had originally been purchased in 2012, and so no SPAs are applicable to this purchase. So if the building has been constructed or purchased like long ago before October 2018, they do not qualify for SPA. If any building which someone is using in their business, if it is like built before October 2018, it doesn't qualify for SPA. So the original purchase price is something related to the construction done in 2012 that doesn't qualify for SPA. But considering a capital expense is now being carried out, a renovation is now being done. So at least that portion of renovation, it is like being done lately after 2018 October, and this makes it eligible. At least this portion is now considered as eligible for SPA calculation purposes. So SPA, the structures and building allowance, it is definitely an allowable expenditure. I'm just going to deduct it, but in unlike capital allowances where we follow accounting period, it is the pro rata basis according to which SPA, the structures and building allowances, need to be calculated. I mean, I need to see that from what day we have started using this building for trading purpose, for business use, till the end of the period. So this is like the months for which the building is being used for business purposes. According to that period, we shall be calculating and then deducting the structures and building allowance. Fine. What the cost is relevant in this case, it is of 160,800. SPA rate is 3%, and considering the date on which we've started using the asset for business use, that's November. So November, December, January, February, and March. So it's about 5 months in the period for which the building was used for business purposes. So relevant SPA is 2,010 pounds. All right. After this, we have property business income, the rental income. This is like another income. Right now, I'm just going to take a total of all these values. I just need to come to the conclusion that what our adjusted trading profit figure will be. So the tax adjusted trading profit for the company will be 1398956. Okay, so it's appearing in cell E32. I'm just going up where I made the pro forma main format. Here, what will I be doing is equal to, and I'm going to write the cell number. It is E32, I believe. Yes, so here comes the adjusted profit. Now I'm just going to calculate property business profit, and I think it is like working 3, which I'll be doing, because capital allowances was a part of working 2. Trading profit calculation was itself a part of working 1, and here comes working 3, in which I'll be calculating property business income. Okay, what we have to do is, in case of companies, it's again an accounting period for which property income is to be calculated, and it is always calculated on accrual basis. There is no cash basis as far as company is concerned. It says that Gamal Limited lets out a freehold factory which is surplus to the requirements. The building was purchased on 1st of January 26. The commercial structure and buildings allowance is not available. By the way, this thing is not there in your syllabus as well, and was empty until it was let out from 1st of March 26. Okay. So from 1st of March, it's about, I think, only 1 month in the accounting period for which the property has been let out. Is that okay? I'm back. So it says that property business income says that the property was let out from 1st of March 26. The following income and expenses are relevant to the period uh, till 31st of March 26. Now, what happens is that there is an insurance for the year which is paid for £5,800 on 1st of January 2026. Following the fact that we are having only accruals approach over here, so January, February, and March, 3 months will be matching with the current accounting period. So the insurance expense related to 3 months only shall be deducted, as insurance is a revenue expense and it is deductible if it is relevant to the property being let out. This 5,800 is a yearly figure, out of which only 3 months are relevant to the current accounting period. So they are going to be deducted. And then what happens next? That on 15th of January, advertisement for the tenants of 1270 has been paid. See if any expense, and see, advertisement expense is not something which is spending for a certain period. We are not going to portion it. It is being incurred in the period in which property was empty and they were waiting for some tenants to arrive. So if the property is in available condition for tenancy purposes, even then the expenses are to be deducted. And what the expense is, this is of £1,270. And are you following the thing that I am always putting the sign of minus before it? Then the rental income of 23,400 was received on 1st March 23, but this is for the quarter ended 31st May. So it's like belonging to the month of March, April, and May. And see, this is 3 months figure, out of which only 1 month relates to the current accounting period. So it's like rental figure, if it is 23 £8,400. If it is like relevant to quarter, I will be picking up only 1 month out of it. So that's £7,800. Then there is like security deposit of 1 month's rent as well. Okay, does anyone have an idea that what do we do with security deposit? How we shall be treating it as? Security deposit, as they have received it, which is like a normal ritual or the normal practice one carries when the property is let out. But security deposit is something which is refunded once the tenant would leave. Yes, you're right. The security deposit is a refundable item. It has no treatment. It is not the premium. It is having no treatment at all. So I have made a room by removing this insurance expense. I'm just going to take it again. 5,800 was the insurance figure, out of which 3 months insurance figure is something we need to take into account. So we did take rent for only 1 month because it is like only relevant to 1 month in the counting period. And advertisement expense is fully deductible because this is not something which we match against a certain period. And insurance expense is something which is meant for the whole year, out of which only those months which are relevant to the current accounting period were to be taken into account. And security deposit, as it is refundable, you can take it as a kind of loan. The landlord takes up at the point of letting the property out. So this is not to be taken into account. And well, I need to see that what our property business profit will be, and that's of 5,080 pounds. So this is like said to be our property business profit, or you may call it as property business income, or simply rental income. So I'm just going to highlight it. Okay, so it is appearing in the cell D58. I'm just going up and the pro forma of corporation tax. Let me just get to it. Here you go. It's, I think, D58. Yeah. So property income is right there in front of you. And then there is an information which is about their subsidiary company from which they are going to be receiving some dividends as well. And from some non-associated group members, they are receiving the dividends. Well, dividend is an exempt income as it is specifically said in the question that if you are not going to include anything or if you are going to exclude anything in the computation, you will have to present the fact with zero. There you go. Now, what will I be doing? My total profit is 1404036, and then we need to deduct QCD. Do you remember that we considered it in the start as it was originally deducted from the trading profit? We had to reverse it, and now the point has come where it needs a deduction. So 8,100 is now gonna be deducted. And that's how we come to know what our adjusted profit will be. Fine. So what our adjusted profit will be, that's gonna be of 139,5936. So this is like said to be our taxable total profit on which corporation tax rate shall apply. It's usually the taxable total profit and then the dividends received from non-associated group members, which is like 5,000 over here. They need to be added up together in order to see what an augmented profit is. And then on the basis of augmented profit, we decide the tax rates. Well, when it comes to the tax rates, they are also flexible as the whenever either the accounting period is shorter than 12 months, or if there happens to be any group company in the situation, then our profit slabs will be changed. And well, when it comes to the lower limit, which is £50,000 in such cases. See, company has made accounts for 12 months, but as they have one associated company, which is Nair Limited, so that means there are two companies in associated group. Our small profit threshold is £50,000. It's gonna be divided over group number. So lower limit is of 25,000, while upper limit upper limit in this case is of £250,000, but it is also subject to change as having two companies in associated group. So that's of £125,000. See, the taxable total profit is itself crossing the threshold of our upper limit. I need not to even see what my augmented profit is, because taxable total profit is itself telling me the clear situation. So what corporation tax rate we shall apply? The corporation tax liability is going to be calculated only by applying the main rate, as it has crossed the upper limit. So 25% of the taxable total profit, that's basically the amount which company shall be paying to HMRC, as it is their corporation tax liability. 348984 is the answer. Okay, so see, I'm so sorry, just a minute. Let me just show you the main performer, as this is how we were calculating our corporation tax liability. This is the performer, and then the related workings are to be shown after the main performer, and the clear referencing labeling is made, and it is all done in a vertical manner. I got a very good question, that do we need to reduce the limits by the number of months? Number one, as they have made accounts for 12 months, obviously, absolutely, there is no need. I mean, if the accounts have been made for 12 months, then what's the point of like apportioning the slabs? But even in this case, if you don't show the profit slabs being changed, your answer will be considered correct, right? As far as this part A is concerned, if you are not going to show your profit slabs being changed on the basis of number of companies in an associated group, even then your answer remains correct and you will not be losing marks. What could be the reason behind this? Why am I saying that despite the fact the slabs are to be changed because of having an associated company in the group, it is not affecting the current situation of Gamel Limited? And even if we are not going to show this apportionment of like 50,000 to 25,000 and from 250,000 to 125,000, even then we will secure maximum marks. What is the reason behind this thing? Yes, already the profit is like quite huge. What exactly the issue is that normally those companies which are falling in the marginal portion or maybe in the lower limits, when their profit slabs are changed, and obviously when they are changed, they are reduced, then the tendency of a relatively high rate application will be increased. But if someone's profit is already too high that it is like crossing the original upper limit, then it is like too obvious that even if the profit slabs are going to be changed, it will remain in the uppermost slab, according to which main rate, the rate of 25% shall apply, right? Okay, there was another question that can you show the rental figure computation? Okay, I'm just gonna be showing it to you. There you go. Okay, so the rental figure is for 3 months for March, April, and May for the quarter ended 31st May. And 23,400 is the rental figure. I have divided it over three. It's 1 month out of 3 months which are accessible. So this is how the whole calculation works. As the accounts have been made for year ended 31st March 26, and we apply accruals approach in case of companies, whether it's about rental income calculation or profit calculation. See, the property was let out on 1st March 26. Before that, there was no tenancy, there was no tenant, and we could not expect any income from anyone else. So starting from 1st March, as accounting period came to an end on 31st of March, so that means only 1 month rent had to be taken into account. Well, 2 months rental figure will be considered in next accounting period calculation, right? Okay, so here comes the second part of this question, which is carrying 3 marks. Now we have to calculate Nair Limited's corporation tax liability for the year ended 31st March 25. Well, there are two companies in the group. Whichsoever companies are found in the associated group, for all of them, profit slabs are changed. So we were previously calculating corporation tax liability for Gamel Limited, as Gamel considered that it itself and Nair, there are two companies in the associated group, which is why their group number is 2. Similarly, when Nair Limited will be calculating their corporation tax liability, they will have to see how many companies are there in their associated group. So Nair itself and their parent company, the Gamma Limited, there are two companies in the group. So the corporation tax slabs for Nair Limited will be changed as well. And how much of the profit they did take. Okay, so that was the dividend for Nair. I mean, dividend is like not going to be taken into account as it is an exempt income, but I did discuss it when I was calculating Gamma Limited, but it was like related to Nair Limited. But now the focusing thing is that they have given us the taxable total profit. I mean, all the income is taken into account, then QCD is deducted, and then we come to know what the taxable total profit figure is. It is of 91200. And see, for even Nair Limited, for every company which is there in the group, their profit slabs are apportioned on the basis of two reasons: whether the accounts are shorter than of 12 months, or they have got an associated company in the group. So their lower limit is like, I wish I could copy paste the previous thing. It's 50,000 pound, but it is like going to be divided over two, having two associated companies in the group. And what the higher limit is, it's of 250,000 pounds. It's going to be divided over two, and the upper limit is, in fact, the precise wordings are upper limit, though examiner will not be penalizing us for having such mistake, but we need to be careful in that thing as well. So upper limit is 125,000 pound. Okay, so their taxable total profit is 91200, and their augmented profit, as augmented profit leads to augmented profit will lead us to decide the corporation tax rate. The taxable total profit is 91200, and Nair Limited, it is Nair Limited dividend. They are receiving dividend from non-group, non-associated group members, which is surely to be taken into account. And that's how we come to know what augmented profit is. Dividend is not taxable, but it is at least added into the taxable total profit figure to see what an augmented profit is, and that value decides the tax year. Well, 96,200 is like falling in between the lower and the upper limit, so it is 25% less marginal relief, which we shall be applying for the sake of creating corporation tax liability. Okay, so now I am going to apply the rate first, 91,200 being taxable total profits into 25%. So what this value will be, it's 25% is 22,800. Then against this, we are going to deduct the marginal relief. Well, marginal relief states that we need to pick up upper limit first. Upper limit in this case is 122, 5,000 pounds, less augmented profits into taxable total profits over augmented profits. The taxable total profits are 91,200 divided over augmented profit again into marginal relief fraction, which is 3 by 200. It is upper limit less augmented profits into taxable total profits over augmented profits into marginal relief fraction, which is 3 by 200. And what the marginal relief is, it is 409.55. You may take it as 410 pounds. So what's going to be the corporation tax liability now? So after taking into account 25% less MR, our corporation tax liability will be of 22,390 pounds. This is like said to be our corporation tax liability for whom? For Nair Limited. I think I should mention the heading as well, just to make it a little bit more appropriate. Nair Ltd. The question is, when do we deduct, when do we remove margin relief? Whenever your augmented profit is found to be in between lower and upper limit, as their augmented profit is 96,200, which is more than the lower limit, 25,000 pounds, but less than the upper limit, 125,000 pounds. So that's basically the point where we need to apply the marginal relief calculation. All right, is that clear to each and every one of you? Now, students, we are done with section C. I've got one more question. Can I use 26.5% on the profits in the upper limit, as this question gave the same answer? Yes, you may do this thing, but when you are calculating the corporation tax liability, be very careful with respect to the presentation of the question. This 26.5% rule is like more valid or precisely to be applied when you are quantifying the amount of tax saved as a result of adjusting your losses. But when you are calculating your tax liability in a straight manner, then it is usually recommended that you first apply the rate of 25% and then you deduct marginal relief. Though either way, as what you say and as what examiner says, the result turns out to be the same. but it may vary in certain cases, and which is why it is not recommended to be something to be applied in like applying the situation this way. But this 26.5% is something which you can and you will have to surely apply when you are adjusting your losses and hence quantifying your tax relief figure. All right. Now, students, as I told you people, that in this latest attempt uploaded by the examiner, we are not given with section A and section B questions. And for that purpose, I'm going to discuss the practice set exam 2 with you people. As I did discuss with you people last day that there are very few exam attempts which are relevant to us, which are according to the latest Finance Act, and UK practice set exam 2 is one of them. I'm just going to click on the start, and from this set, we shall be doing section A and section B. Okay, again, there's instruction manual we have. Okay, so there is like we are going to take a start with section A, as it does contain 15 objective test questions. Every question is of 2 marks. So altogether, the question is going to be of 30 marks in total. So here you go. There's the first OT. Kindly read it out. Okay, well, I believe that you must have gone through the question. See, when you are doing this section A and section B, as I told you people before, that you need not to show any workings to examiner, but somehow you will have to carry out a little bit of the calculation in order to arrive at the answer, for which this scratch pad could be used. And maybe in the exam center, you will be given with an extra loose sheet on which you will be like doing a tiny bit of the calculation in order to arrive at the answer. So it says that ML is registered for VAT for the quarter ended 31st March 26. The input VAT incurred on his purchases and expenses included the following. So it's about entertainment of overseas customers. When it is about entertainment expense, uh, it is normally not recoverable, but if the entertainment is about overseas customers, that the only thing for which input VAT is recovered. This is not the value of expense, this is the VAT itself. So this £320 is recoverable. And then there happened to be a purchase of new office equipment. When anything else for the sake of business purposes is required, the related VAT is for sure recoverable. So this £1250 is also recoverable. Then we have another thing which is about the purchase of a new car. And you need to take a stop because car is something when it is purchased or any capital expenses are incurred on it, the VAT is not recoverable at all. Though with respect to all the routine expenses of car, be it the fuel expense, the repair expense, the relevant VAT values are totally recoverable, but that's not the one related to purchase of cars. So 320 and 1250. Could you please tell me the total? 320 and 1250. I believe this must be 1570. Okay, 1570. This is the amount of VAT fully recoverable. And see, I did not apply any comma, any full stop. When you are dealing with section A and section B questions, you will not be providing any extra characters other than the numbers itself. By the way, I believe that the system will be will be giving you a prompt as well. Okay, let's try if I put comma. Okay, so yeah, they say that this doesn't match the expected format. So it's only about numbers that you be inserted in section A and section B. Then we have another question which says that Acasta Limited owns 75% of the ordinary share capital of Barge Limited and 100% of the ordinary share capital of Coracle Limited. Let me just uh, show the structure on the Word document as well. So Acasta is having 75% holding in Barge Limited and 100% in Coracle Limited. And then what happens next is that Barge Limited would then own 75% ordinary share capital of Dow Limited. So it's like 75% holding of Barge is in Dow Limited. And Coracle, on the other hand, owns 51% of the ordinary share capital of 8 Limited. All right, so I have opened too many documents. Let me just close them. Now the structure is there in front of you. Now, what are they asking? Which companies alongside Coracle? So Coracle is must, but along with Coracle, which companies are within Acasta Limited's chargeable gains group? So chargeable gains group is the group in which the direct shareholding of 75% and effective shareholding of more than 50% is found. See, at every level, there is a 75% shareholding, but not with it. And if I apply the effective control, Acasta is directly controlling Coracle, but it is like directly controlling Barge and indirectly controlling Dow. With indirectly controlled companies, I need to figure out this effective holding. Could you please tell me what is actually 75% of 75? What exactly the percentage will be? 75 of 75. Thank you. That's 56%. So this is like more than 50%. So Acasta, Barge, Coracle, and Dow, they are there in the chargeable gains group. They have already told that Acasta is like making this group. Coracle is there, but alongside Coracle, how many other companies could be found in the group? So it is about Barge and Dow Limited. So the answer is option C, right? Is that clear? Now it is said that it's not clear. What else is like creating a confusion? Yes, both of the conditions are to be met. We will simply be having 75% at each level in the group, which is being fulfilled at every level except for eight. And then in all the indirectly controlled companies, as Acasta is directly controlling Barge and Coracle, but for indirectly controlled company, as how Acasta is controlling Dow, the effective shareholding has to be of more than 50%. This is for the chargeable gains group condition, and the previous percentage and the new percentages are to be multiplied with each other, and together the result comes out to be 56%, which shows that this is more than 50%. So yes, it is like an eligible company to be there in the chargeable gains group. Now we have the third question. It says that Nadia died on 13th of February 24, leaving an estate. Whenever the word estate is given, that means they're talking about the death estate. They're talking about the things which were not distributed in someone else's life. So it is like all left at the point of death. They were valued at 275,400 for inheritance tax purposes. She left 50% of her estate to her son and 50% to her husband. So whatever is like left to her husband, that will go exempted under exempt legacy rules. And her husband is Tariq, and Tariq subsequently died on 17th January 26. Then neither Nadia nor Tariq made any lifetime gifts. The inheritance tax nil rate band for the year when she died, that was 255,000 pound. What is the maximum available nil rate band that can be used while calculating inheritance tax payable in respect of Tariq's estate? All right. So when the second person dies, the second spouse dies, they need to know that how much of the nil rate band will be available. It is a kind of a little bit comprehensive situation, as when Nadia died, I need to make sure of the fact that whether her nil-rate band was properly used or not. Because if any of her nil-rate band was left, that could be used by the second person. So could you see that she died on 13th of February 24, which is falling in the tax year 2003 4. And when she died, her estate was valued at 275,400, right? IHT is something which you have to deal in a chronological order in a date-wise manner. So it's 275,400. This is basically a makeup of all assets and liabilities. And then we need to deduct the exempt legacy to spouse. As Tariq was alive by that time, 50% of the value of estate was given to Tariq. Could you please tell me what actually makes up 50% of 275,400? 137700. Okay, so 137700, and of course, the remaining half will be chargeable, and it was left to her son. That was a gross chargeable estate. Okay, at that time, NRB, obviously, NRB with respect to the year of death needs to be taken into account. And according to the question, at that time, NRB was of worth 255,000 pounds. This is like quite an old matter where when NRB was different, 255,000 pound, and it needs to be adjusted for the chargeable transfers made in the last 7 years. And when, well, it is said that there is no chargeable transfers made in the last 7 years. But here, only 137,700 was used. The taxable estate value became nil, and there had been no IHT on her death estate. And one thing is clear that her NRB was not completely used. So technically, I need to see that how much of the NRB was left unused. I did not have to show the whole of the calculation, but considering I am actually teaching you right now, which is why I am like doing the proper calculation. Otherwise, if I had to just figure out unused NRB, that could be quickly done on the calculator as well. So how much of the unused NRB figure is 137,700 was used out of 255,000 pounds. So what is unused precisely? There's a question, what about annual exemption? See, annual exemptions, small gift exemption, marriage exemption, uh, normal expenditure out of income exemption. These exemptions are available against lifetime transfers, but not against death estate. This is something which Nadia did not give away in her lifetime. This was left to be distributed by the date she died. So this doesn't qualify for annual exemption. Okay, could you please let me know that what an unused NRB figure will be? One one seven three hundred. Thank you. So 117,300 is left out of 255,000 pound, and whatsoever the unused value of NRB is, that will be used at the point of calculating death IHT on lifetime transfer and IHT on death estate. I mean, while at the time of calculating death inheritance tax values of the second spouse, this is like something which we shall have to take into account. So 117,300 is left unused at the time of Nadia's death, but there is a problem. 117,300 is the figure which is left out of 255,000 pound. I mean, when she died back in 2003-4, there the values were different. So in this case, I need to figure out the percentage of the NRB which was left unused. Could you help me out in determining the percentage if 117,300 was left unused out of 255,000 pound? What does that mean? What percentage she did not use? I mean, it had not been used when she died. Approximately 46%. So 46% was left unused. And what will happen? Now, when Tariq, the second spouse, would die, this percentage is additionally become available with respect to the value prevailing in the tax year of Tariq's death, in the tax year of second person's death. So when Tariq would die, let's have a look at this. He died on 17/20/26, which is falling in the tax year 25/26, when the NRB was 325,000 pounds. And he is going to have 46% additional. So 46% of 325,000 is going to be additionally available to Tariq. Could you please tell me what additional value is gonna be available in this case? 46% of 325,000 pound will be equal to what? I think that's going to be equal to 149,500. So altogether, what total value of NRB is available when Tariq would die? That's going to be of 4,74500. Is that so? So 4,74500 is the maximum total amount of NRB which is available at the point of calculating IHT on death estate and death IHT on lifetime transfer when the second person would die, when Tariq would die. So which option is correct? It is the second option, which is 4,74500. I hope this thing is now correct. Yeah, 56% was the balancing amount, but then you could have either way you had to figure out the percentage, and if you just figure out that what is left for the next person, you need to see that 46% in this case is like left to be used by the second person, but percentage is determined with a view that it is to be applied on the value with respect to the tax year when the next spouse would die. So obviously the values would change every year. The leftover figure was like relevant to the tax year 2003 for, well, the year in which the leftover figure is going to be used, that was 25-26. So of course, in order to match the base value, we had to figure out the percentage. And I'm gonna be taking you to the next question. Kindly read it out. All right. Now it is said that Habib purchased a copyright. It's an intangible asset for on 30th of April 2008 for 31,200 pounds. The remaining life of the copyright at the date of purchase was 30 years. Okay, so at the point of acquisition, if intangible asset was having a life of 50 years or less than that, that means it's an intangible wasting asset. And when such assets are sold, we will not be picking up the total cost for the sake of computing capital gains. Rather, the cost related to the remaining life shall be taken into account. Now, on 30th April 2025, well, it was acquired on 30th April 2008, and disposal is going to take place on 30th April 25 after like so many years. Can you identify that after how many years the copyright is going to be sold? From 30th April 28 to 30th April 2018, that is straight away making up 10 years, then 19, 20, 21, 20, 23, 24, and 25. I believe 17 years are gone from the date of purchase. Since the copyright was purchased, it's been 17 years, right? So at the point when the copyright was sold, only 13 years were left, right? And they had sold it for 27,900 pounds. Well, in this case, what we are going to do, 30, 27,900 is said to be the disposal proceed. Against the disposal proceed, we have to deduct the cost. The cost figure is, you could see it's of 31,320 pounds. But in such cases where the intangible wasting assets are gonna be sold, the original cost is not going to be deducted. 31320. I'm so sorry. This is 31320. Only the costs related to the leftover life shall be considered, which I believe is equal to 13 years. What do you have to say? Do you agree to this that 13 years are left out of 30 years? or 14 years are left. Just see, there could be a chance that I couldn't calculate the leftover years properly. So it's like 30th April 8 till 30th April 18. That makes up 10 years. And then from 30th April 18 to 30th April 19, one more year, then 30th April 20, 21, 22, 23, 24, and 25. I think 17 years are used up, and well, I think 17 out of 30 years are elapsed. So 13 years are left. Okay. So just let me know that how much of the cost is related to 13 years? How much of the cost is related to 13 years? 31320 is the original cost into 13 by 30. What would it make up as? 13,572. Okay. So 13,572 is the cost. When you are going to deduct it, there you come to know what the chargeable gain on the disposal of copyright will be. 27,900 less 13,572. What would be the answer? One four three two eight. Okay, so this is the gain. Let's have a look what they are exactly asking. Over here, we need to calculate chargeable gain or the loss in relation to the disposal of this copyright. Now, the thing is that our answer is correct, but unfortunately, there is no option available right now. And when I had to check the examiner solution there, I spotted a mistake that they had calculated wrong number of years. This happens rarely. That this is not a frequent thing which examiner makes, but this is not exactly the issue of examiner. See, this is a past exam attempt, some very old attempt, and every year it has to be changed so that students could do practice with the help of latest questions available on the practice platform. But sometimes it may happen that any such thing is like left properly calculated. So maybe they did not change the solution, which is why our solution is not matching with it. Well, what is the correct answer in this case? This is of 14328. Clear? Is that thing clear to you? Now we are heading towards another OT, and after this, I will be giving you people a 5 minutes break. Which of the following is the correct definition of an extra statutory concession? There are certain extra manual or instruction sort of things which HMRC um, releases time to time, in which there is one thing which is called extra statutory concession. Now, if you people do not know what an extra statutory concession is, you need to try figuring out the meaning of this thing with the help of the word itself. So it's like extra, something additional, statutory, what is like legitimate, which is like existing by law, concession, a kind of reduction, discount, where less amount is involved. So technically, in certain areas, HMRC tends to reduce the taxes by taking into account some genuine, legitimate situations. Maybe, for instance, if someone is like a specially abled person, I hope you know the meaning of specially abled person. And in order to consider this thing that he or she might not be imposed with the with harsh taxes or with exactly the same rates of taxes as it is like imposed on other people, then there could be a chance that a kind of leeway, a discount is given to them. Maybe where other people are paying taxes, for instance, at the rate of 40%, they might be paying taxes at the rate of 30%. That is just a random thing I'm talking to you just to make you people understand. Otherwise, there is low 20 or 30% existing. So this is like extra leverage a government is gonna be giving to certain individuals or companies by taking special issues into account. So, what is the correct definition of extra statutory concession? Could you figure it out by looking at these four options? Okay, someone says B. What about others? There is one more option. It's option 1A. Yes, a provision for the relaxation. See, this is a kind of discount reduction of the strict application. Instead of like applying harsh laws, if relatively a flexible, lenient tax rate is to be applied in order to consider someone's situation by giving him some extra favor, that is how the extra statutory concession would work. So it's option A, which is correct, right? Okay, with this, I'm going to give you people a break of 5 minutes. We'll resume right after 5 minutes. All right, I'm back. Now we have another OT which says that complete the following sentences relating to the length of the time a sole trader is required to keep their accounting records after the end of the tax year in which self-assessment tax return has been completed. So technically, sole trader has to keep their records for 5 years, after 31st January, after the end of the tax year. 5 years would mean 60 months, 5 into 12, because there are 12 months in a year. So 5 into 12, that makes up 60 months. 5 years starting from 31st January after the end of the tax year. That is the period till which sole proprietor has to retain their business as well as non-business records. But when employees' records are to be taken into account, it's about 12 months only. It's about only 1 year, 12 months only, for which the accounts, the information is to be retained after the end of the tax, after the end of 31st January. So it's like I'm just going to fill it up. A sole trader is required to keep their accounting records for 60 months, 5 years, after 31st of January following the end of the tax year, both in case of employees and other people. It is after 31st January following the tax year, the records are to be retained. But the number of months are different when it comes to employees, as they have to retain their records for only 12 months. And usually they themselves do not retain their records. Their employers actually do that thing on their behalf. Here's another question in which it is said that Sanjay has been trading for a number of years. His tax-adjusted trading profit for the year ended 31st of March 2026 was 27,770. He's a self-employed person. I need to know what his adjusted profit is and then to which tax year this profit is relevant to, as he has made accounts for year ended 31st March 26. According to the basis of assessment, this profit is all in all belonging to the tax year 25-26. And here we have to know that what class for NIC will be. Okay, well, I believe that if you do not remember the rates of NIC, then this is like nothing to be worried about, because you should know that how NIC works. But you may straight away leave this rates thing till your exam day, as the rates and the relevant slabs will be provided to you people in your exam. Class for NIC states that for an earning over first 12,570 pound, there's going to be no NIC. Then an earning which is falling in between 12,571 till 50,070, there happens to be an NIC for at the rate of 6%. And well, earnings which are found in excess of 50,000 to 71, there we apply NIC at the rate of 2%. Okay, well, their profit is 27770, which is like very much within the range. I'm just going to open their calculator, as you may have the facility of using this calculator as well, though it is like very hard to use this calculator. All right, so we know that we would not be charging NIC for first 12,570 of the earnings. So 27,770 less 12,570, the remaining earnings will be assessed at the rate of 6%. So NIC value will be of 912 pounds. So this is the answer, 912. And I hope you now remember that with section A and section B, in the blanks given, you will only be inserting the numbers and not any extra characters like full stop, comma, slash, dash. No, nothing. Is that thing clear? All right, now we are heading towards the next OT. In fact, I'm giving you people, as you know, that for a 2 marks OT, you should be given 3.5 minutes. Okay, so well, I'm gonna be giving you 3 minutes for this. Kindly do the calculation and then I'll straight away show you the solution for this. It's about calculating rental income for the company. The company's name is Model Limited. I hope you all are trying to solve it and do not get puzzled. Even if your answer goes wrong, it is not going to cost you right now. Well, it is said that the company has let out an unfurnished investment property. And again, with companies, you will have to be calculating everything according to an accounting period. And when it comes to the calculation of either trading profit or property business income, you will be applying accruals basis. So company has received rental income of £3,000 every month, and this is for the year ended 31st December 26, and paid electricity related to the rental property of £200 a month. Though the electricity payment for December wasn't paid till January, but it is not the payment approach, the date of the payment that is relevant over here, because we are not applying cash basis. It's always accruals basis, the matching concept, which is important when it comes to companies. Okay, so £3,000 is the rental figure for a month, and seems that for the whole year the property has been let out. So the rental figure would be 3,000 into 12, that makes up 36,000, I believe. And electricity expense is also something related to every month, though for the month of December, the payment got delayed. But as long as the expense is relevant to the period, it's included. It should be taken into account. So 200 into 12, that makes up 2,400, right? And then it is said that the company has paid interest on a loan taken out to finance the purchase of the rental property. See, in case of companies, whenever you are going to take up the loan and paying interest on it, see, this is a type of loan which is a non-trading loan. This is being acquired with an aim to finance the rental purpose. So it is a purpose which is other than the trade. So it's a non-trading loan, and whatever the interest they pay, that is deductible against interest income. The interest income is another thing which becomes a part of our corporation tax figure. So if interest is relevant to trading loan, it is a trading expense. Interest expense is a trading expense, and it is deductible against trading profit. And if other than trade, we take up the loan, then interest expense is deductible against interest income, and it is not to be taken into account over here. So what's going to be the rental figure? I believe this is the property business profit is going to be of £33,600. So first option is correct. Are you all clear about this? All right. Now it is said that which of the following will not, focus on the word, they have mentioned it in capital letters as well, will not cause Harper to be treated as automatically UK resident for the tax year 25-26. If Harper is spending 192 days, I believe if someone is spending 183 days or more, that is automatically gonna be treated as a UK resident person. So, of course, it is not the first option. Then, if Harper rents a house in the UK to live in and occupying it as the only home, if someone is having an only home in the UK, that is another condition which treats you, which actually lets you to be treated as a UK resident person. So in even in this option, Harper is going to be automatically treated as UK resident person. Then it is said that Harper is accepting a 15-month contract for a full-time job in UK right from the start of this tax year. So if someone is like going to be doing a full-time job in UK, that person is obviously going to be treated as an automatically a UK resident person. And then there is like fourth statement in which it is said that Harper's husband living, the spouse is living in the UK throughout the tax year, and Harper stays with him whenever she visits UK. So this is like indicating towards a tie. I mean, there are five ties, and they are used when automatic tests are failed, and then on the basis of few things, as in how many days you are living in the UK, and were you previously resident in UK or not, and how many ties you are having with UK. Then on the basis of all of these things, we eventually decide that whether person is to be treated as a UK resident person or not. But this is just indicating having a tie with UK. This is itself not sufficient to treat someone as an automatically UK resident person. So this is the correct option. Yes, you're right. It's a UK tie. It's not the condition for a person to be taken as an automatic UK resident person. This is not something I haven't highlighted it. It is like already a highlighted question. I just wish you can see it properly. It says that Somily Limited filed its self-assessment corporation tax return for the year ended 31st December 25 on 15th March 27. Identify by clicking on the correct date on the timeline below what the deadline is for HMRC to start a compliance check inquiry into Somily Limited's corporation tax return for the year ended 31st December 25. Now, this is a technical question, and if any of you had gone through the questions of Kaplan revision kit, you must have seen this type of question. Okay, so luckily we have opened this kind of question. Let me just take you to the slides through which I taught you this fact. Just give me a minute so that I may open it. So this is about income tax administration, where we discussed, and it is like relevant for both individuals and companies, that inquiry has to be raised within 12 months after the actual filing date. Let me just open the corporation tax slide, because this fact, though the fact is same, but it is being asked from company's point of view, though this thing could be asked from an individual point of view as well, as individual returns could be inquired upon, and inquiry procedure can also take place when it comes to corporation tax. So I've opened this corporation tax thing. Okay, so normally what we have learned, that when a notice of inquiry should be raised, normally it is raised within 12 months after actual filing date. But here I would like to add one thing. If the filing is done either on or before the due date, as long as individuals and companies are going to file their return before the deadline, before the due date of filing the return, then everything is perfect. But if either individuals or companies are going to file their return, they are going to submit their return after the due date, then inquiry notice date will be somehow changed. So as far as the question is concerned, see, the company has got a year end of 31st of December, and thankfully it's gone, 31st of December 25. So company has made accounts for year ended 31st of December 2025. I hope you remember, for individuals, the due date for filing of return is 31st of January after the end of the tax year if it's about online filing, and 31st of October after the end of the tax year if it is a manual filing, if it's a paper-based filing. In case of companies, it is always done on online basis. It is always an online thing, and the due date is 12 months after the end of accounting period. So the company has made accounts for year ended 31st December 25. And I need to know that what is the normal date of submission of their tax return. Now just tell me, what is the deadline? What is the due date in this case? Yeah, that the due date has to be 31st of December 2026. Now, this is how you will have to determine the due date. In case of individuals, of course, the due dates are different. But first, you need to figure out what the deadline was. Now, you need to see when the company has filed their return. Did they do it before the due date? If they have filed their return before the due date or even on the due date, then inquiry notice needs to be raised within 12 months after actual filing date. So whatever the date on which they have actually filed the return, there are 12 months for HMRC within which a notice can be sent to the company, which is like stating that their compliance procedure will be taken into account. But just have a look at the date on which they filed their return. That's 15th March 2027, and that's the problematic area. Did they file their return by the due date? The due date was 31st December 26, and they filed their return on 15th of March 27. So when did they file their return? They got late in filing their return. And if they got late in filing their return, then HMRC has got 12 months after the end of relevant tax quarter for raising a notice in which the procedures for the upcoming inquiry are laid down. Now, what is meant by tax quarter? Actually, HMRC has split the whole year into 4 quarters, for which you need to learn this strange mnemonic JOJA. So that's Joja. So I don't know, in maybe in your language, Joja has some meaning. In my language, in my native language, Joja doesn't have any meaning at all. But this is like indicating what? This is about July, October, January, and April. So this is how tax authority has split their year into 4 quarters, quarter ending in July, quarter ending in October, then in January and April. Okay, so this is how they have split 12 months a year into a set of 3 months into quarters. And now you need to see when did they file their return, as they are late, but when did they file their return? March. Okay, so out of Georgia, which quarter comes to an end? Which quarter would be an immediate quarter which is coming to an end? Would that be July, October, January, or April? What comes after March? Immediate quarter ending right after this date on which filing was done. That's April, right? So it's April. So that's about April 27, right? And then HMRC has got 12 months after the end of that relevant tax quarter within which they will raise a notice for inquiry. So that would mean by 30th of April 28, as after this date on which return was filed, the quarter came to an end on April 27, and then HMRC has further 12 months in which they would be raising the notice to have an inquiry. So it is like till 30th of April 28, within which the notice could be raised. So it's like 30th April 28 is the correct answer. Had they filed their return before the deadline, then 12 months after the actual filing date would be the relevant time period within which inquiry notice has to be raised. I don't think so that this is like given in the notes, but this is something which I have recorded in the practice sessions, and it's there on the portal. And it is a very, I must say, this is a very exceptional thing which is like tested in the past. This is not something which is taken in a routine manner. But even the purpose of like doing this activity is to make you people familiar with the fact that this may happen. All right, now we are heading towards another OT. It says on 6th of April 25, Melinda rented out a furnished room in her house to Jenny at a rent of 720 a month. Jenny continued to rent the room on the same terms until 5th July 26. Now they are talking about individuals. Melinda continued to live in the house and paid for all the living expenses, of which £175 a month related to the room rented out to Jenny. Now, what is the Melinda's property income for the tax year, assuming that any beneficial elections are made? So, in case of individuals, whenever a portion of the house is going to be left out, provided the sum of the portion is being occupied by the owner, we calculate the rental income on definitely the most efficient basis. On one hand, we will be carrying out a normal calculation, and on the other hand, we will apply rent a room relief. And see, this is all being done according to the tax year because individuals do consider tax year. Okay, according to the normal situation, what we have to do is they need to take rental figure. The rental figure is 720 a month. Now, as they are carrying out the calculation according to the tax year 25-26, and the rental activities started on 6th April 25, and every month Melinda will be receiving rent from Jenny. But according to that, how many months are relevant to this tax year? It's like April till the end of this tax year, which ends on 5th of April 26. I believe we need to take into account only 5 months, only 9 months. What do you have to say about this? Shall we be taking all the months in calculation, or we shall be considering only 9 months in our calculation? Yes, exactly. That's 12 months rental income that we need to take into account. This is how I was just trying to make a random confusion. Because despite the fact they have mentioned the rental terms remain the same till 5th of July, that is like making up 1 year and 3 months on the whole. But obviously, we are going to carry out a calculation for the tax year. They did not tell us whether they're applying the cash basis or accrual basis. And in such cases where no such information is given, we consider that uh, we have to apply cash basis. But see, it's not like that Melinda has received a rental income for 15 months in full completely in the start of the period. So she's like taking up rental figure on month by month basis. So that would mean that she must have received a rental figure for 12 months. So 720 into 12. Could you please tell me that what is going to be the rental figure? 8640. In both of the cases, whether you try normal approach or a rental room relief, the rental figure is first taken up. In normal approach, you are going to deduct the expenses, and under rental room relief, you are going to deduct the special exemption. Okay, so normally the expenses are of £175 a month, which would mean 175 into 12. It's like, thank you, 2100. And under special exemption, we will not be deducting the expenses. Rather, we are going to deduct the special exemption. And now we need to see that what is going to be the property business income under each option. So 8640 less 2100, that is of 6540. And on the other hand, if I apply rent-a-room relief, 8640 less 7500, that makes up 1140. So out of these two figures, we shall be picking up the lower one because this is what is the preferable basis would mean to us. The lower the figure is, the lower will be the tax liability, and that's of 1140 pounds. So 1140 is the correct answer. All right, we have another question. Kindly read the question and then I'll discuss the solution. Well, see, there are three unconnected companies having these results. Fine. So we will have to consider the situation for all these companies independently. They are not connected, by the way. They have, though they all have the same number of associated companies. These are independent companies, but their associated group number is like same for the last many years. So it says that which of the three companies will not have to pay corporation tax by quarterly installments. Now, the first thing is that if a company is said to be a large company, when they become a large company in the first accounting period, this is a grace period where they will not be paying the corporation tax liability in installments. But once a company had become a large company, then from like subsequent accounting period and onwards, they shall have to pay corporation tax in installments. So if the question is about that which company is not required to pay taxes in installment, that would mean that which company is not supposedly be taken as a large company. And how would we determine the large company? This is all about comparing your augmented profit with profit threshold. With a limited space, I am not able to produce correct spellings. Yes, you're right. 1.5 million profit threshold. So augmented profit is what? It's about the company's taxable total profit plus dividend if it is received from non-associated company. So whatever the value comes out, that is called augmented profit, and we compare it with the threshold. The threshold is of 1.5 million. I mean, 1,500,000 pounds. So if someone's augmented profit is found to be either equal to or less than the profit threshold, they are considered as a small and medium-sized company and they will not be paying corporation tax in installments. And if someone's augmented profit will be found greater than the profit threshold, then of course they'll be considered as large company. Even large company in its first accounting period of becoming a large company, they are not supposed to pay taxes in installments, but from second period and onwards, if they remain the large company, they shall have to. Now, one more thing, that this profit threshold can be changed. It's flexible. This 1.5 million thing, 1,500,000 pound, is subject to change if the accounting period is of less than 12 months, if it is a short period, and or if there happens to be associated companies in a group. So if that's the case, even then we shall be revising our profit slabs. Right? Okay, so keeping all this stuff in your mind, now have a look at the question. Asher Limited is the first company. They have made their accounts for the whole year. So their profit threshold is not subject to change on the basis of short period because the period is not short. And how many companies are there in the associated groups? That is 3. Okay, so first of all, I am going to determine that what is going to be their profit threshold. The profit threshold for normally for a company is 1.5 million. It is going to be changed on the basis of group companies. So it's going to be of 500,000 pounds. Now, augmented profit is going to be compared with this. See, if I talk about their previous 12 months, their uh, TTP, the taxable total profit was 600,000 pounds. And they did not tell us about any dividend being received from non-group companies because it is added into taxable total profit to determine the augmented profit. So it's 600,000 pounds. Well, 600,000 pounds. Could you see that 600,000 pounds for the previous period? If I consider it, then in the previous period, their augmented profit was greater than the profit threshold. So it was a large company in the previous period. So if they became a large company in the previous period, that was their first year, they were not required to pay quarterly installments. But if I talk about the current period in question, it's 700,000 pound. They did not tell us about the dividends received from non-group members. So augmented profit is same. And it is again, greater than 500,000 pounds. So this is the subsequent year of becoming a large company. And this would mean that Asher Limited was not just a large company in the previous period, it is the large company in the current period. And that is why they shall be paying their corporation tax liability in quarterly installments. Right? Is it clear till this point? All right. Moving, sorry. Moving to the next. Barton Limited, their current accounting period is 4 months long, but their previous period was 12 months long. So we'll have to carry out a little bit extra working because I need to know what was the situation in the previous period, and then I'll let myself know that what is the situation for the current period. So for the previous period, the accounts were made for 12 months. So in the last period, it was 12 months, it was not short, and they do not have any associated company. So profit threshold was unchanged for the previous period. For Barton Limited, the profit threshold was 1,500,000 pound. Neither the accounts were shorter than 12, and there were no associated companies in the group. And what their taxable total profit was, it was of 1,600,000 pound. Though in taxable total profit, I do need to know what the dividend received from non-group member is, but that's the information not given in the question. So augmented profit is same, 1,600,000 pound. And well, 1,600,000 pound is quite more as compared to the profit threshold. So the company has already become a large company in the previous accounting period. And now just look at the current situation. Now, in the current situation, the company has made an accounting period for 4 months, which is like quite possible, but this will be impacting our profit threshold, right? And there is no associated group company. So first of all, I'm going to revise the threshold. 1,500,000 pound is meant to be a profit threshold when accounts are made for 12 months. If accounts are made for 4 months only, then what is going to be the profit threshold? I believe that has to be 500,000 pound. And now compare augmented profit of the current accounting period with the current profit threshold. 600,000 pound is the taxable total profit. There are no dividends, so augmented profit is same. And 600,000 pound is way more than 500,000 pound. So it is still a large company. If the company would become large for the first time, they may skip quarterly installment payments, but it had already become a large company. And this is now the next period in which they are still considered to be large company. So they will be paying their corporation tax liability in installments. So this is like once again all about installment thing. Then we have the third company, and that is Shelfrey Limited. Shelfrey Limited has made accounts for 12 months in the previous period. So once again, our profit threshold will remain unaffected. And plus, you can see that there are no associated companies in the group. So of course, we'll have to first apply the scenario with respect to the previous accounting period. Again, what the profit threshold is, that's of 1.5 million, and see what their augmented profit is. I've told you that in this case, non-group dividends are not given in the question. Otherwise, when TTP and non-group dividends are added up together, we come to know what an augmented profit is, but there is like no dividend discussion in this question. So taxable total profit is considered to be equal to augmented profit. Well, it is of 1.4 million. This was not a large company. It was not a large company. As far as the previous period was concerned, they must be amongst small and medium-sized company. And what is like happening right now in the current tax year? Again, they have made accounts for 12 months and there are no associated companies. So profit threshold will remain unaffected. That's same 100 and 1,500,000 pound, and their augmented profit is now 1,600,000 pound. Now the company has just become a large sized company in the current accounting period. But I've told you that His Majesty Revenue and Customs have given a leverage to the companies in the first accounting period of them becoming a large company that they will certainly have to avoid the quarterly installment payments. So yes, it is only the Shelfrey Limited, despite becoming large company, because they are having this grace period, they will not be liable to pay corporation tax in installments, right? I hope you all got this point. Is that clear? All right. Now we have another OT in which they say that David had the following taxable income after deducting personal allowances. So taxable income is certainly an income against which the qualifying interest payment and the personal allowances are already deducted for the tax year 25-26. See, they've told you 8,500 pound belongs to non-savings, 2,400 is like belonging to savings, well, 2,750 is relevant to dividends income. And this is like simply a straight case of computing your tax liability. I hope this one must be the easiest, most OT of the whole practice set. So non-savings figure is 8,500. If you just take a total of the taxable amounts of these three columns, I believe this is not crossing the threshold of 37,700 pounds, right? So how would I declare David as? Is he a basic rate taxpayer or a high rate taxpayer? Yes, he's a basic rate taxpayer. Correct. So keeping that thing in mind, of course, I'll have to take a start with non-savings income first. Taxable income is 8,500 pounds. So that's going to be assessed over a basic rate of 20%. And well, 20% of 8,500 pound will be equivalent to 1,700 pounds. Then we have to move to savings income. Being an individual, first of all, I need to see that if there is a margin in the starting rate band, but that's not the applicable case, because for that purpose, either the taxable income belonging to non-savings column has to be completely zero or at least less than 5,000 pounds. So there is like absolutely nothing in the starting rate band for savings income. Then what we have next, it's 2400. So 2400 is the taxable figure. Being a being a basic rate taxpayer, first £1,000 is going to be assessed over nil rate, and the remaining amount shall be covered in the basic rate band where the rate is again 20%. So 2400 less 1000 into 20%, that would be of £280. And then we have dividends income. Dividends taxable figure is 2750. 2750, and I hope you people remember that in case of dividend, whether a person is a basic rate taxpayer or a high rate taxpayer or even an additional rate taxpayer, the nil rate band will remain the same, and that's of £500. And on the excessive amount, we shall be applying the basic rate. Well, basic rate for dividend is different. It's 8.75%. So let's see what's going to be the answer. 2750 less 500, into 8.75%. So that's going to be of 186 approximately an amount. Now, what's going to be the grand total? Could you please tell me what is going to be an overall tax liability for David for the tax year 25-26? $1,700 plus 280 plus 186. What would be the answer? Dividend is 197. Let me just do the calculation again. It's 2750 less 500 into 8.75%. Yes, that's 197. Okay. Well, what's going to be the overall answer? 2177. Okay, let's see whether. See, this style of question is called drop-down menu. We find the very first option to be 2177. So this is going to be the correct answer. All right. Then we have second class OT for section A. It says that Geeta died on 17th of May 25. She died in the tax year 25-26. At the date of her death, she owned the following assets. See, this is all becoming a part of her death estate because she did not transfer anything in her lifetime. The house was worth £390,000. The chattels and cash were worth £70,000, and she had shares held in ISA of worth £60,000. Do not confuse it this time, as interest received from ISA is exempt from income tax. And when someone is going to dispose of investments in ISA in the lifetime, there happens to be no CGT. But this is all about inheritance tax, where every asset is chargeable. So it says that at the time of her death, Geeta owed income tax of £25,000. That is relevant to the tax year 25-26. And she left £100,000 of her estate to her husband, with the remainder of the estate was going to be left to her daughter. Now we need to see what is the chargeable estate value for inheritance tax purposes. Be very sure of the fact that they are not asking you to figure out the inheritance tax liability. I mean, there is going to be no tax implication. It's just that we will be figuring out the GCE, the gross chargeable estate value. Well, what we need to take into account first, the overall assets value. The assets are taken into account on the basis of their market values existing at the point of death. Uh, Normally, it's the market value which is relevant, but in case of insurance, it is the proceeds value of the insurance. They are relevant for making up a death estate computation. Okay, so what the house value is, could you see it's of £390,000. Then chattels and cash had worth £70,000. I'm just going to include everything. Everything is chargeable for IHT. And then we have 60,000 pounds. These are all about the total assets. Then if deceased person had any liabilities pending at the time of his death, they are to be deducted. But if the deceased person had made any verbal promises or any certain sort of amounts were pending, which were not legitimate. I mean, if it is said that someone was owing gambling figure before the date of death, then it's gone. Government is not going to be taking responsibility of settling of this gambling thing or any verbal promises which a deceased person would have made before dying. So, but here, if you could see, Geeta owed income tax of 25,000 pounds. Well, it's a constructive responsibility. Yes, it's a kind of liability. Her this is like something going to be settled out of her estate first. So what we are going to do, the liabilities are going to be deducted from the assets value. And then what we need to do next, we need to see that if there is like any exempt legacy in the question, if someone is gonna be transferring anything to their spouse that is not gonna be caught under tax regime, and she is left 100,000 pound of estate to her husband, so this is like something which is gonna be exempted. And now you need to tell that what value is left behind, because this is something which first of all will be given to his daughter. Secondly, this is something which is called as GCE, the gross chargeable estate, on which inheritance tax needs to be calculated. It's 395,000. I believe you must be correct. So 395,000. Yes, this is the second option we have in the drop down menu. Is this thing clear so far? All right. So heading towards the last question of section A. And despite rushing through section A, could you see that we haven't yet started with section B? So I'll try handling at least one OT case of section B. I think that is doable. But I shall be providing you people with the solution of two OT cases, so that you people will be having a complete set with you people. And later on, if you come across any problem, you are totally welcome to drop as many queries as possible in the WhatsApp group, right? And for all those students who are not enrolled, they may drop their concerns by tagging me the question in the global group, right? Okay, so we have this question. It says that Anika sold her entire holding of 3,000 ordinary shares in Distribo Limited, a quoted trading company, in fact, an unquoted trading company, to her son, Hemi, for 53,000 pounds. So this is the consideration that she has charged from her son. But whenever there happens to be a transaction between the two connected parties, then it is the market value which is going to be replacing the original proceeds. See, they say that the market value of the shares on that date was 98,000 pounds. So I shall be picking up 98,000 pounds instead of the price on which they have transferred these shares. And she had purchased these 3,000 shares back on 28th of October 2011 for 41,500 pounds. She has never worked for Distribu Limited. Could you please tell me that why they have highlighted this fact? I mean, is that something which I need to flag? She has never worked for Distribu Limited. For instance, if she had worked ever in this company, then what might have been changed in the whole scenario? Yes, she was never an employee. And I'm saying that had she been an employee in this company, then what else could be changed? Because there could be a chance that this time round you will be given with a question in which someone is working in the organization and they have passed on the shares to their connected persons. No idea. Just giving you a clue that there is going to be an application of a certain relief which requires the transferor to be an employee for a period of at least 2 years prior to the date of transfer. That was a clue. Is that helping you? Uh, yes, you may say investor relief, but see, as I did change the wording that someone was working, and that's for the 2 years. It's BADR, Business Asset Disposal Relief, which is like available in that case. Investor relief does not require a person to be working in the organization. That is applicable if the shareholder is just an external person. They have to be like no involvement in the day-to-day operations of the company. Clear? And here I wouldn't say that any sort of even investor relief would apply if she is just a shareholder. See, for that purpose, there are certain other conditions need to be fulfilled as well. So, in that case, the shares shouldn't have been purchased. You need not to be the second purchaser or the subsequent purchaser of the shares. You have to be the one who had acquired the freshly issued share capital, for which we use a very specific term, that's you must have subscribed for the shares. But if Anika would have like subscribed for the shares, then this fact must have been clearly mentioned, as they did say that she purchased the shares. That is like clear, very much clear in this regard that no investor relief is even possible. Okay, what we need to do is that we need to identify by clicking on the relevant boxes in the table below the amount of gift holdover relief, if any, that could be claimed in respect of the disposal of these shares and Anika's chargeable gain for the tax year 25-26. See, for an unquoted company, whatever the shareholding you have, whenever you are going to transfer the shares, it is to be treated as a transfer of business asset, and thus gift holdover relief may apply if it is claimed. Okay, well, in this case, what we need to know first, I have to calculate the chargeable gain by picking up the market value as the disposal receipt. What the disposal value is, that is of 98,000 pounds. And then we need to deduct the original cost, as she purchased them for 41,500. Now I need to know that what the original chargeable gain figure is. 98,000 minus 41,500, that's of 56,500 pounds. And considering she has made a transfer of business assets, shares in an unquoted company do qualify for gift holdover relief. And I hope there is a mutual consensus, because if they are saying that this is to be applied, that means both donor and donee of the asset are mutually showing willingness on having gift holdover relief. But there is like one twist in the story, as she has received 53,000 pound, and in all such cases where the donor will be receiving a consideration in excess of their original cost, the excess amount will remain chargeable upon them. So she's getting 53,000 pound, which is more than 41,500 pounds. So I need to see that how much excess figure she's getting, which is like still chargeable on her, which is not going to be passed on to 53,000 less 41,500, that would be of 11,500. So Anika herself will be liable to consider 11,500, while the remaining gain will be held over in the form of gift holdover relief. So 11,500 less 56,500, that's of 45,000 pounds. So that's the gain which could be relieved. Now what they're asking, what is going to be the gain for Anika and what is going to be the gift holdover relief? C for her, the gain value is of 11,500 pounds. This is like only left to be chargeable upon her. And 45,000 pound is the gain which is going to be deferred in the form of gift holdover relief. See, this is how you are going to um, highlight the correct answer. So this is like another way through which OTs could be tested. Did you all get this point? Is that clear to each and every one of you? All right. Okay, before heading towards section B, I would tell you that once the session will be over, I'll be sharing a few things with you people. As I've promised before, that I'll be just giving you a, a planner in which is going to instruct you that what you need to do in 10 days before taking your exam, before taking up your exam. But this is your choice whether you'll be making your own schedule or you'll be following mine, because everyone knows their limitation, their preparation level, and also it's like totally up to you. But I'll be sharing the list of important section C questions as well. Though I have already shared this list with my enrolled students. And this is the list related to section C only because I believe that you need to practice as many questions as possible when it comes to section A and section B, because these two sections are actually the game changers, right? So one should have done ample practice when it comes to section A and B. Well, we are now at section B. We have 3 OT cases. Every OT case will be carrying 5 OTs. Right now, considering the time limitation, I'll be just discussing one OT case with you people. Okay, so kindly start reading the question and then I'll discuss all the questions. I'm going to scroll up the screen so that you may have a look at the leftover information. And with that, you must be done with the whole content related to this OT case. Do let me know once you are done. All right, so we are going to see our first OT related to this OT case, that which of the following sentences correctly explains why neither of Zoila's share disposals during the tax year 25-26 qualify for business asset disposal relief. See, there are few conditions which are to be met for the relief to apply. First of all, the shareholding has to be at least 5%, and then the relevant person who is disposing of the shares need to be an employee as well, and both the shareholding and the employment has to be there for a period of 2 years right before the date of disposal. So if I consider the shareholding in the minor limited, see, she's been director of this company since 1st April 20. So this is like the time the time frame is something which is suitable in this case. But see how many shares she had originally acquired. She had originally acquired 22,500 shares, which is like, if you just compare it with the total shareholding of the company, it's about 200,000 issued share capital. See, her shareholding percentage is 11.25%. I mean, the shareholding criteria is good as well. But the problem is that she acquired shares on 12th of December 24, and she's going to dispose them off on 20th of June 25. The time condition is to be met both for the status of employment as well as in case of keeping the shareholding. I mean, she should have kept the shareholding for a period of at least 2 years prior to the date of disposal. So, he is an employee, sorry, Zoila, she is an employee, plus she has got a good shareholding, but both the employment status as well as the shareholding has to be kept for a period of 2 years prior to the date of disposal. Well, shareholding is like kept for a very shorter period of time, so this doesn't qualify. Then, if I consider her shareholding status as far as major public limited company is concerned, see, major public limited company has issued 2 million ordinary shares, out of which she has only 16,000 shares, which is like not making up, I believe, 5% holding. Let's check it out as well. 16,000 out of 20 2 million, that is basically making up only 0.8%, not even 1%. So it's like the relevant shareholding is not met when it comes to major public limited company. So that's like another thing for which she doesn't qualify for business asset disposal relief. So what do you think, which option is correct? or you can see all the four options. I think option A is correct because it says that the disposal of shares in minor did not qualify because of the holding period. The time condition was not met, and the disposal of shares in major public limited company did not qualify because of the size of the shareholding. She did not have at least 5% of the holding, right? I hope this is clear to each and every one of you. Now we have another OT which says that what cost figure will have been used in calculating the chargeable gain on Zoila's disposal of 20,000 ordinary shares in Minor Limited. And before that, I do this question with you people. Let me just tell you that, for instance, if someone's question number one goes wrong, it is not going to have any impact on question number two because all five OTs of the OT case are designed in such a way that they are like independent of each other. You may have like question number two correct, your question number four might not be correct, but it's not like that if your first answer goes wrong, then it is like going to change the overall scenario for the leftover questions. No, these questions have been sensibly designed by the examiner in such a way that your one conclusion is not going to impact on the answer of other question. Okay, so what cost figure we need to use while calculating chargeable gain on Zoila's disposal of 20,000 shares in Minor Limited? Well, Zoila purchased 20,000 shares originally for 45,000 pounds. Sorry, she originally purchased 22,500 shares for 117,000 pounds. That was their disposal receipt. And then there happened to be a one for one right issue. See, in case of individuals, we apply the share matching rule by picking up the cost in respect of the shares which are acquired on the same day. I mean, when the shares are sold, we need to see if the shares from the same company of the same class, if they are going to be acquired uh, on the same day, then the cost will be considered as the relevant one. Then on the second go, we shall be picking up the cost related to the acquisition of the shares made in the next 30 days. Well, neither she had acquired the shares on the same day in Minor Limited, nor she did acquire any shares in the next 30 days. Then what we have to do next, the third option is to make an FA 1985 pool, and the average cost of the share will now be picked up. Okay, so originally, how many shares she got in Minor Public Limited Company? That was of that was about 22,500 shares, and what was their cost? See, the cost was of 117,000 pounds. And then later on, there happened to be a one for one right issue. So if she used to have 22,500 shares, she is going to have exactly the same number of shares once again. But how many, I mean, how much of the cost she had to bear? That was 7.4 pound for the each new share issued. This time round, she's going to get exactly the same number of shares. And how much of the cost she's going to bear? 7.4 pound per share. Could you please tell me what is going to be the cost for these 22,500 shares? 22,500 into 7.4. That's equivalent to 168750. Thank you, 168750. Now you need to tell me that what is the overall situation. Now, before the date of disposal, she had, I believe, 45,000 shares. And what is going to be an overall cost? What's going to be an overall cost? 117,000 plus 168. 750 I think the overall cost is 285,750. Correct? 285,750. So this is like said to be the overall cost for the overall shareholding of 45,000. Can we change the right issue cost? I mean, is this the question you're asking? See, the companies, whenever they are going to issue their, I mean, whenever the company would like to make an issuance of share via right issue, they usually announce a price which is found to be below the market value and the existing shareholder. Okay, this is 166,500. Okay, okay. So sorry, I just thought that was a generic question. Okay, 166,500. Okay. So now just let me know what the total of these 45,000 shares is. Eight three five hundred. Now, what the point is that Zola has disposed of 20,000 shares. And we need to know that what is the cost relevant to these 20,000 shares. And that's now the simplest most thing as 283,500 is the overall cost for 45,000 shares, out of which she has disposed of 20,000 shares. So what's going to be the cost relevant to the shareholding that she has disposed of? Now again, you need to let me know that what is the cost equivalent to 20,000 shares disposal. So 126,000 is the relevant cost that we will use at the time of calculating chargeable gains. Here comes another question. It says that what proceeds figure we will have been used in calculating the chargeable gain on her disposal of 16,000 ordinary shares in major public limited company. Now, the thing is, as you could see that she has actually sold her entire holding to her son, where the market value will become the most prominent feature. They haven't told you about the market value, rather, they have provided you with the quoted prices 9.62 and 9.74. And if you are supposed to figure out the market value of the shares being sold, you need to get the average of the two figures, the higher quoted price and the lower quoted price. Both are given to you people in your question, 9.62 and 9.74. So 9.62 and 9.74, and I'm just going to take an average of the two figures. So market value is considered to be equivalent to 9.68 pound per share. Now, how many shares she had transferred to her son out of major public limited company? She has given away 16,000 shares. And as I've determined, market value of each share is 9.68. So that becomes an easy thing, that what's going to be an overall market value. It's going to be equal to 154,880. So this is like said to be the overall market value which we consider as disposal proceed. Is this thing clear to each and every one of you? Okay, now we are having the second last OT. It says that if Zoila had delayed the sale of her 16,000 ordinary shares in major public limited company until 6th of April 26, by how long the related CGT liability would have been deferred? See, if she's like going to make a disposal on 6th of March 26, this is the date which is falling in the tax year 25-26. And normally, I mean, I should precisely say that apart from the disposal of the residential property, the relevant CGT liability is gonna be due by 31st of January after the end of tax year. So if she remains consistent, if she's going to dispose it off right now, her gain will become a part of the tax year 25-26, for which the tax liability will have to be settled by 31st of January 2027. But if she is going to delay it to 6th of April 26, which would mean that her disposal will then be falling in the next tax year, because 6th April 26 is precisely the start of the tax year 26-27. So by just delaying it for a few days, her transfer will be belonging to the next tax year. And of course, the related tax liability will be due on 31st of January after the end of tax year, which is in this case 31st January 28. So could you see for how long the related CGT liability can be delayed? Instead of paying the taxes on 31st January 27, she will then be liable to pay taxes on 31st of January 28. So there happens to be a delay of one complete year. And I'm just going to drop the menu down. For how long the CGT liability could be deferred? It's about 1 year, I mean 12 months. Clear? All right, so now we are heading towards the last OT of this OT case. It says, assuming that the tax rates and allowances for the tax year 25-26 continue to apply, how much CGT would Zoila have saved if she had delayed the sale of her 16,000 ordinary shares in major public limited company until the following tax year? See, what is the current situation? She is just having 10,600 pounds available in the basic rate band, and which is why currently she could make use of this value while calculating her CGT liability. And if she delays her disposal till next year, she will still be having the same amount available in the basic rate band, because they're saying that her level of income will remain the same. It's just that she's going to change the date of the disposal of her shares in major public limited company. And of course, right now, if she makes both disposals in the current tax year, she will have the annual exempt amount for the current year. But if she delays, then she will have 3,000 more. As in, this 3,000 pound is like, you may assume that this could be adjusted completely and easily against 98,800 pounds, but just delaying it, even this 41,400 will be able to get reduced with the help of this 3,000 pound. And the further thing is that she will be able to consume the remaining gain in the basic rate band by applying the rate of 18%. And how much of the basic rate band will we do have? That's of 18,000, sorry, that's of 10,600 pounds, right? And of course, by using the basic rate band and having an annual exempt amount, which could be solely adjustable against your gains, this is going to lower down the tax liability. Are you all getting this point? That because of having this access to the basic rate band, which is now currently we assume that it's like only available for the minor limited shareholding disposal, but then we have further liberty in case of like utilizing this leftover value in the basic rate band, and we will be able to make use of annual exempt amount for the next tax year as well. So let's see that instead of like you will be carrying out the whole calculation and then comparing the two situations, that will be like consuming a lot of time. So you really need to work on the margins when the things are like so clear. See, exempt amount in the next tax year, she will be able to reduce her chargeable gains, and by reducing her chargeable gains would mean with the help of annual exempt amount, she would be saving taxes on £3,000 completely, because £3,000 is the value for annual exempt amount. Currently, if she makes both disposals in the same tax year, then minor public limited company is like sufficient enough to absorb this thing. So we will have £3,000 again in the next tax year, which is going to reduce our gain, and hence we will be able to achieve a saving of taxes. And she is a high rate taxpayer. So if there happens to be a reduction in her gain, she will lead to save CGT at the rate of 24%. Of course, whenever we tend to adjust anything, I mean, whenever we are going to adjust annual exempt amount or the losses, there happens to be a reverse calculation. We tend to save the higher rate of taxes. We tend to drop down the higher slice of income, and hence taxes which are otherwise applicable over the high rate, they are somehow reduced. And then because of like having the basic rate band, this amount, though the gain which is going to be adjusted in the basic rate band, that will be taxed, but instead of being taxed at the rate of 24%, because currently the situation is that major public limited company gain is not having any place in the basic rate band, so they are being taxed at the rate of 24%. By delaying the disposal would mean they will have basic rate band, and that would mean that they will be paying off the taxes, but only at the rate of 18% and not at the rate of 24%. So another 6% will be saved as well. So I just need to see that how much saving will be achieved this way. By deducting annual exempt amount in the next year, we will be all in all able to save £720. Then by consuming the basic rate band, instead of like charging the tax rate of 24%, which is something the case we have to face right now, we shall be paying taxes only at the rate of 18%. So hence another 6% will be saved. So that would be of £636. So altogether, how much of the tax will be saved in this case? That's of £1,356. Altogether, overall saving of £1,356 will be achieved. And there you go. They haven't given us any option over here. And let me just tell you that if I just show you the standard solution of your examiner, he has figured out the same answer, but unfortunately, and I hope now you have understood the issue behind this thing, that though they have computed this value, but they forgot to change the options, because every year as tax rates tend to get changed, this is going to have an impact on all the options on the relevant answers. So they this time round they kept this thing in mind that they have to redo the answer, but unfortunately they couldn't help us out with the options available. So but Nevertheless, keep this thing in mind that 1356 is the correct answer. And this is not going to happen in your real exam. These are few glitches which may be found on the practice platform exam sets. Is this thing clear? Is this thing clear? Now, students, please let me know if you have any concern, any query related to taxation. Please drop it down in the dialog box so that I may answer to your queries, and afterwards we'll have to wind up the session. To your taxation exam, please let me know by dropping your concerns in the dialog box. I'm all here to respond to your queries, and I'm waiting for that. Students, just give me a feedback. Did you find this session fruitful? Okay, I'm glad that this session was fruitful for you people. Again, what the documents that I've promised with you people, I'll be sharing them as a free resource to you people. You will find the link in the global group precisely, but all the enrolled students, as we have another group, so I'll be sharing these documents over there with you people. But I believe that I have already shared these things before in the start of this month. So I wish you all the best for your exam. The time has come to call it a day. Wish you all the best for the upcoming exam. Work hard so that in the end you can party hard. That's all I can say. With this, I'm going to wind up the session. Thank you so much once again for being a part of this session. Have a happy weekend. Goodbye.